A very warm welcome back from the weekend, everyone. I am Melissa Enoke, the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Monday, December 22. This is your Money Moves.
All right, let's begin with your news now. Gabon's credit ratings were downgraded by Fitch, with the long-term foreign currency issuer default rating lowered to CCC minus from CCC, and the local currency rating cut to CC from CCC. The move reflects widening fiscal deficits, limited access to regional debt markets, and weakened appetite for government debt amid declining oil output and rising public investment risks. Fitch expects Gabon's government debt to climb to 80.4% of GDP in 2025, underscoring the continued fiscal pressures facing the Central African nation. Economists and analysts at Commercial Partners say that the stability in the Nigerian exchange market, inflation, and interest rate are likely to continue in the new year 2026. Speaking with Frontier Africa Report's executive editor, Bosing Amofaye, on Monday, a co-managing partner at the Investment Banking Services Group, Steve Oshaw, pointed to the expected political continuity in Nigeria ahead of the 2027 elections, among other factors for their forecast on the incoming year. Let's listen.
They are going to look at all the data. They're going to look at inflation number. They're going to look at the GDP performance. They're going to look at a lot of other macroeconomic factors. And I think that said, with all the parameters we've seen now, it doesn't look like we are being spooked by any of those data. So I think the first quarter, second quarter, there will be some kind of study. I don't think anything's going to happen for the first MPC meeting in February. Maybe thereafter, we actually might see some dovish stand or some adjustment of the MPR going forward. However, I think from the kind of government borrowing that we're looking at in 2026, 17 trillion is going to be borrowed from the market. I think 80% of that will be done through local borrowing, and 20% will be done from the international capital market. That might cause a bit of yield to move up slightly. But that said, there is a lot of liquidity coming to the space next year as well. Between January and June 2026, I think we have over 27 trillion maturing in OMO and bills. So that will account for something, and that will account for some investment that need to be reinvested. And don't forget that the PFAs and the FPIs are still looking at Nigeria. A lot of them are still in the country. A few of them are still coming to Nigeria because of what we've seen in terms of the exchange rate stability. The volatility has reduced, and that said, it means that a lot of them will be looking at our yield curve, probably T-bills, bonds, and a lot of them will be looking at equity as well. And coupled with the recapitalization that's going to happen for banking sector and insurance sector next year, there's going to be a lot of opportunity in that space. So we see more positive than negative in 2026 from the macroeconomic space. And I think from the investment point of view, we're going to see a lot of investment opportunity in 2026.
In Cameroon, the government has obtained 51.8 billion CFA francs in financing from Standard Chartered Bank to modernize Cameroon Development Corporation industrial facilities. The funds include a 71.7 million euros bias credit backed by BPI France and a 7.1 million euros commercial credit to support new palm oil, margarine, and rubber processing plants. The 25-month project aims to boost local value addition and reduce reliance on imported processed goods. Kenya has reviewed a decade of implementing circular economy policies as the country assesses how resource efficiency can drive growth and job creation. Here are excerpts.
We believe that the three pillars of sustainability need to be really thought together, and the three pillars are ecological sustainability, social sustainability, but also economic sustainability. And business models need to be viable. Yeah, no one will open a business to save the climate if there's not an economic case behind it. But likewise, the times in which we can operate businesses without thinking about CO2 emissions, without thinking about the ecological footprint, are definitely also over. And I feel that here really circular economy comes into place. Apart from the definitions, what circular economy really is, you're probably all much more conversant on that and much more experts. I just want to really underline that circular economy is not only an environmental concept, but really a powerful economic sustainable development. Why Africa? Africa is urbanizing much faster than any other region. By 2050, the population will double, creating enormous demand for housing, food, and energy. And at the same time, a lot of African countries face high unemployment and resource constraints. So the circular economy really offers solutions. It can create millions of jobs, reduce imports, and build resilient local industries. We believe that.
Meanwhile, Nigerian oil producer Heirs Energies has secured a $750 million five-year financing package from Afreximbank, one of the largest funding deals ever for an indigenous African energy company. Signed in Abuja on December 20, the facility will support field development, production optimization, debt refinancing, and new growth initiatives as Afreximbank backs the use of African capital to meet Africa's energy needs. In other news, Mozambique, Zambia, Malawi, and the Democratic Republic of Congo signed a ministerial declaration on 19 December to extend the Nacala Railway Corridor, aimed at strengthening regional integration, facilitating trade, and providing a competitive logistical link to the Indian Ocean. The agreement plans a railway line of approximately 2,400 kilometers connecting Chipata in Zambia to Serge in the DRC, passing through Malawi and Mozambique. The project seeks to consolidate the Nacala corridor as a strategic axis for landlocked countries to access the port of Nacala, promoting regional economic development, according to Mozambique's Transport Minister, João Maslombe. In other news, as foreign direct investment continues to grow across the East African community, land-based sectors such as agriculture, mining, and infrastructure are expanding rapidly, but not without cost. In this documentary, researchers and advocates highlight how women who form the majority of the workforce in these sectors face low pay, insecure jobs, gender-based violence, and weak labor protections, even as investment flows rise. Let's listen.
The issue of saying these issues are in the informal sector. We have seen the informalization of the formal sector because most of these companies are formal companies, but we have seen the casualization of labor. The company is formal, but they don't give contracts, They give per day, you work per day. So it's a formal sector, but there's informalization. You don't go on leave, you don't have maternity leave, you don't have annual leave. When you fall sick, you don't earn. Yet it's a formal sector. So we need also to look at that. The issue of trade unions, Honorable Farhadi raised the issue of trade unions. Our trade unions are very, very weak, and we need to see how to strengthen them. They are really weak, but they have also been politicized. I will give an example of Uganda. Honorable Mongeni is here, can be able to support me. We have members of parliament representing workers in parliament, but the issue of the minimum wage didn't pass through in parliament. And our minimum wage in Uganda here is 6,000 Uganda shillings. 6,000 our minimum wage. 6,000 per month. 6,000. The dollar rate is 3,500. So it's less than $2.
Finally, on News Now, Morocco's tourist infrastructure has expanded by 43,000 new beds over the past 2 years, bringing total lodging capacity to more than 304,000 beds, according to data from the Moroccan Society of Tourism Engineering. The increase is a key outcome of Morocco's 2023 to 2026 National Tourism Roadmap, which seeks to strengthen infrastructure, diversify the tourism offer, and attract new investment across regions. I am Melissa Enoch, and that's it on News Now this Monday. The show returns shortly with Grace at the archives room, giving us our market rounds. Stick around.
We are, as you know, we are Pan-African. It's in our DNA. It's the DNA of householding of our parent group. And our investment thesis is even named after Africa, Africa capitalism. But you know, I can't talk about deals or things that are in motion. I think what I can tell you is that the way we have come today to make an announcement on the second pillar, on flares elimination, I think let's watch this space. We think we would have some announcements to make on the third pillar in the coming months, year 2026. And then for Africa, I think that I have to say, wait, you'll be one of the very first to know. But you should know that we are very active. We've met in a number of the locations in Africa as we are trying to play out and build our Africa playbook. But take that aside, we are looking, and this today is just an indication that we are looking to be impactful in energy, in Nigeria and in Africa.
Welcome back to Money Moves. Let's now go over to Grace for today's market updates. Hello there, Grace.
Thank you, Melissa. Let's now take a look at how the markets open trading for the week, starting off with the equities. The Nigerian Stock Exchange extended gains into the new week by 0.26% to 152,459.07, while the BRVM retreated 0.83% to 340.97. The Nairobi Securities Exchange edged up 0.12% to 184.78. In South Africa, the Johannesburg Stock Exchange advanced 0.74%, and in North Africa, EGX30 slipped 0.59%, while Morocco's MASI declined 0.21%. Let's do a quick round on some of the Pan-African currencies. The rand strengthened 0.42%, 16.70 against the US dollar. The Egyptian pound weakened 0.25%, 47.45, while the CFA franc is 0.19% to 558.93. The Kenyan shilling was largely flat, inching down 0.01%. The Moroccan dirham softened 0.16%, while the naira gained 0.11% to 1,460 naira 14 kobo. Let's switch into the commodities data deck, beginning with energy prices. Oil prices climbed sharply, with Brent crude surging 2.17% to $61.78, while US WTI jumped 2.21% to $57.77. Natural gas rose 1.53% to $4.04, and RBOB gasoline gained 1.86% to $1.74 as at 13:34 GMT. Now, finally, two metals prices. Gold rallied 1.43% to $4,449.90, while copper was little changed, down 0.03%. Platinum sold 5.10%, aluminium added 0.38%, and iron ore edged up 0.02% to $106.92 as at 13:38 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching and bye for now.